Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the technical analysis of the price action, where I think things are heading, taking a look at the kind of data side, the news side, any potential kind of trade opportunities and those kind of things. Now as I get into today's video, if you do find it useful and informative, smash that like button, I do appreciate that. If you're watching on YouTube and you haven't yet subscribed, what you're waiting for, go ahead and subscribe by tapping the bell, selecting all the notifications. You will not miss another video update. If you're watching us over on X, then why not go ahead and give us a follow and give us a retweet. Really do appreciate that. Helps kind of push the content out to more like-minded individuals. Okay guys, let's waste no more time. Let's jump right down into the recent moves for Bitcoin and review what's been going on, kicking things off with our 1 hour time frame. Here we have Bitcoin paired up with USDT. We're using the 𝗕𝗘𝗪𝗔𝗥𝗘 spot exchange for the analysis. So following on from yesterday's video, we were expecting a move upwards. As you can kind of see here, we're looking at this as a three-wave pattern. We were targeting out the slightly higher range at 29,569 to 29,619, right? We were looking at short-term opportunities to short the market from this particular area with good risk management to come down into our low target range. Our low target range was between 29,088 and 29,187. So with yesterday's recap there, you can see that we failed to hit the entry of the short position, which means we did not short this particular move to the downside. Even though I was shorting from up here, okay, because I shorted this move with a nice tight stop loss here, and we were targeting out to come down here, I actually exited out on the assumption that we were going to be moving on up a little ways further before coming and shorting the market. Now, because I was so busy yesterday, I missed this opportunity to short back in, but I still made some decent profit on the initial short anyway. So let's kind of reflect what happened here. Well, our C wave here did actually just come up a fraction higher, as you can kind of see, than our A wave. It truncated and fell short, and then we started to move on down. This does change our B wave to being slightly lower than expected, which isn't the end of the world. If I go ahead and remove our yellow box here and move the fibs now, because this fib measurement is basically this entire A wave structure. If we move over to where our B wave finished, right up here, we need to adjust our low range target. Okay, even though we kind of came down into the range, it isn't correct. The correct range is actually down lower, so we've still got some room to the downside to be had here. Okay, so our new target for this is actually 28,966 to 29,067, so $29,067, right? We can see that our structure is of quite a bit of interest to us, but we haven't yet kind of completed. Now, our minimum expectations have been met. Our minimum would have been a double bottom. That's already done. So instead, we are now looking at potentially complete structure or just tapping down that fraction more. Taking a look at the current price action here, it's actually possible that we do just tap down into this range just a little bit. We can see this as a potential W, X, Y, X, and Z pattern within this ending structure. Let's go ahead and just sense check it. Actually, no, for the most part, it looks like it's probably done there. It'd be interesting to see whether or not this is a three-wave pattern overall, but it's 3 down, 3 up, so we could come down in another three-wave pattern. Let me show you what I mean. Here we have an A, B, and C. That's complete, not a problem there. We then go up here into a three-wave pattern. We've come down quite aggressively here. This could be our A, come up into B, and come down into C. Either way, I still think we have to come down towards that 28,968 to 29,066. That's going to be our little range there. I'm going to go ahead and remove the fibs so we can take a look at it there. Okay, so that's our correction structure on the hourly chart taking us down here. Now we are in a bearish structure. As you can see, this change of characterization. We were previously bullish, as you can kind of see up this side, right, with our change of characters into a bullish state of play. This has now actually changed. We are in a bearish structure, okay, and we can note that just in here, as you can kind of see. So now we're in a bearish structure. This was confirmed at 8 o'clock last night, UTC +1 UK time. And of course, you know, we're waiting to move up, probably find resistance up towards the 50 EMA and continue this move to the downside. Ultimately, we have to kind of look at the data here as a bit of a reversal. And this isn't terribly too unusual because on our daily time frame, which we'll go up to now, we can, of course, acknowledge find it. There it is. Acknowledge that we were just talking about coming down into the 28,294 to 29,176. This area is what we're looking to come down into one more time before we rally on up. Now, it's no coincidence that our 200 EMA is also lifting up quite nicely here. It's currently at 27,302. We're looking at the 200 EMA as a good support level on our daily time frame. And so what we are looking for here is a rally upwards. So I suspect that we are likely to come down a bit further before we do rally on up, where our target range is still sat there between 34,946 to 37,051. This area is also a CME gap on the futures market, where we had a gap left behind at the 34 to 35,000 USD. This gap is created from a different close position to an open position on the daily time frame. And more often than not, the CME gaps are filled. There are, in fact, only 3 that I can see on the chart for the CME gaps. Let me see if I can find it. It is within my list here for our CME gap. No, it's this one. Is that, yeah, this one. And so if we just zoom out of this, you can see that we have our CME gap here on the daily, sat up there at 34,455 to 35,180. We have one down here at 20,330 to 21,110. And then, of course, we have the one that's really been left behind at 9,735 to 9,925. And this one was all the way back in 2020. We have one up here that was generated up in May of 2022. And then we have most recently this one at the 20K area created in March of 2023. Okay, so there's 3 CME gaps. So the only 3 on the chart that have been left behind. Ultimately, we can see here that there's going to be, in my opinion anyway, a break upwards towards that first CME gap at 35K. Once we kind of complete that up there, grab that gap, I think we go down to the 20K area. That's going to wreck the altcoins, but actually is a pretty sustainable and pretty corrective structure for Bitcoin. That's not the end of the world. It's actually a nice corrective pattern that I think we have to see. Catalyst for this can be many different things, everything from maybe a spot ETF getting rejected rather than being approved, all the way down to a Fed pivot, because when Fed do pivot, markets tend to crash. Ultimately, there's a lot of really prominent people in the space now shorting the stock market very aggressively. I think we saw a $1.6 billion short on the stock market, and I think that's going to be an indication of what I think is actually going to be unfolding here, a massive move to the downside. Whether this comes as a Fed pivot this year or next year, I'm not sure, but ultimately I think we are likely to see a nice healthy correction on Bitcoin down towards that 20K. Lose that area, talk about 17K, lose 17, and well, at that point you are going to be going down into a new low for BTC. Now, where are we on a weekly time frame? Well, on our weekly time frame, not much has obviously changed because we talk about this every day, and obviously weeks, when each one of these candles is a week, right, and it takes a long time to kind of play out. Ultimately, we're still in the consolidation range, which was previous area of resistance and support, so 28,600 to 32,289. This area is actually chewing through the sell orders quite nicely and is holding up quite well. Taking a look at our EMAs, 27,068 is our 50 EMA, and 25,694 is our 200 weekly EMA. Ultimately, the 50 EMA is acting as support, so if we is to see a wick down here, when the 50 EMA is probably going to be the area of support, which would coincide nicely with support levels on the daily 200 EMA. So ultimately, I think we're actually finding that there's going to be good support to be found here on the short term. We're in and around that kind of $27,000 to $28,000 level, that 1,000 kind of level gap. I think that area is of particular interest, and I think it's an area that we are likely to see support to be found, and that will be when we start to see this rally up towards the 35,000. Okay, once complete though, and once we kind of come up into this upper area right here of previous support that we lost, this is where I think resistance is going to come in. It's 34,324 to 37,713, and it's no coincidence that this is the area of resistance also happens to fall in line with that CME gap. I think ultimately this is going to be the area where we find we get smacked right the way back down, and it could be that we see massive movements in price, altcoins getting absolutely demolished, and $20,000 Bitcoin. Ultimately, I think this would be the last opportunity for cheapness within the market, but we'll have to see whether or not those levels hold for Bitcoin. If they do not hold on Bitcoin, then expect further downside, but ultimately I think we're getting close to seeing the altcoins bottoming once we see this next big move on Bitcoin. Ultimately, we have seen new lower lows, bear market low points for many of these altcoins. I think there are a handful that have bottomed, but for the most part, most altcoins still look like they need to aggressively go down. And so Bitcoin can hold its low if it holds that 20K area, but it doesn't necessarily mean that the entire crypto market is in a bull run, because many altcoins are still hitting new bear market low points. Ultimately, that's where the weekly sits. So let's go up into our data and take a look at what's going on here. So we're heading over to membership.𝗕𝗘𝗪𝗀𝗧𝗏.io, which is our membership website. You get a 7-day free trial here, guys. Of course, that's across all of the plans that we have to offer, and we offer a lot of different things. So you can check that out, linked in the description below. If you do go ahead and try to do a 7-day free trial, just make sure that if you don't want to continue it, you head over to your profile area and you cancel it. If you do not cancel it, you will be charged. Let's go ahead and take a look at the data zone, and we're going to take a look at the Bitcoin data. Coming over into our Bitcoin data, we have our overview for the last 24 hours. We can see that there were 497,000 transactions in the last 24 hours, 860,000 active addresses, and the fee structure was $393,000. We can see that that's actually pretty sizable amount for only 500,000 transactions, and we say that because we can compare it to other smart contract platforms such as XRP Cardano, for example, where Bitcoin and Ethereum just simply are way out of kilter for their fee structures in comparison to some of these cheaper, more efficient blockchain technologies out there. Okay, that being said, obviously Bitcoin isn't really a great currency. Maybe it's more of a store of value. It's not something that you're going to really want to kind of utilize as a payment method, in my humble opinion anyway. Going on over to the liquidation side of things, we can see that there's been $12.6 million of Bitcoin liquidations. OKX was the exchange with the largest amount of liquidations at 4.9 million. 93.54 positions were long positions that were liquidated, and 6.46% were short. This was quite a shocker to me because it didn't make sense that people were going long on the market on Bitcoin here. So maybe there were some interesting positions that were just kind of maybe entered at the wrong point in time, and obviously stop losses were hit or whatever. I did find it quite a bit odd that it was that high on the liquidation side for the longs. I know we were moving down, but it just felt like there was a bit of foolishness maybe going on there, just gambling that it'll go into the moon or something. I don't know. I found it interesting. OKX was 38.59% of all liquidations. Binance in second place at 27.57%. 𝗕𝗘𝗪𝗀𝗧𝗏 in third place at 14.08%. And yeah, Bybit at 10%. And you can see some interesting consistencies here because OKX was 94% long, Binance was 87% long, 𝗕𝗘𝗪𝗀𝗧𝗏 was 94% long, Bybit was 98% long. So there was definitely a lot of long positions, and I was just racking my brain as to kind of why long positions at that particular point in time. Still baffles me. Maybe there was some body saying that that's a good long position. I don't know. Anyway, nonetheless, we can kind of see that there was a lot of long positions, $12.6 million of liquidations. 93% of that was liquidating, people gambling that the price was going to be going up. From a wallet count point of view, we can see the wallets that have over 1,000 Bitcoin have still been aggressively coming out of their positions. We haven't seen there being an accumulative perspective here. Ultimately, we can see that over the pretty much since the 1st of January here, we've seen some downside. We've seen some liquidity being drained out of the market. We've seen some volatility in some ranging markets in the last 365 days. This is wallet count. These whales are down 6.23%. So essentially, it doesn't give us that kind of great overview as kind of what is going on. When we take a look at it from a trader's point of view, it's very flat. So traders are in and out of the market all the time. They're not seeing any accumulation at large levels, not seeing any major sell-offs at large levels across the board, right? Where you look at that from a 365-day view, 180-day view, or a 90-day view, it's very, very flat. Now, from a retail point of view, obviously it's accumulative, right? We can see that there's a lot of the narrative around Bitcoin being in a bull market. We're now buy now before you regret it. Those kind of narratives, you see it across various different platforms, X, Facebook, YouTube, and so forth. And for the most part, it means that these retail investors are really buying into the idea. You can see that a lot of these smaller wallets are up very aggressively. They've been buying the Bitcoin from the larger whale investors, right? And so the data is quite clear on this. Essentially, large players are selling and smaller players are buying. You see a wallet increases on the smaller side and wallet decreases on the larger side. Now, these are inclusive wallet counts, okay? And I need to be very clear about this because it can be a little bit misleading and can be a little bit confusing at times, specifically if you're not used to large data sets. We are talking about, in this particular example right here, wallets that have over 0.1 Bitcoin. That means it will include wallets that have over 1,000 Bitcoin. It'll include wallets that have over 10,000 Bitcoin, for example, right? And so when I kind of scale these up and we talk about units, wallets that have over 1 Bitcoin, wallets that have over 10 Bitcoin, they're inclusive of everything above, okay? But they exclude anything underneath. And why we do this and we don't just cut it and say between 1 and 10, is that we don't want to have these really big spiky line graphs. What we want is a nice linear curved line that allows us to look at minor movements that kind of dictate where the pattern of data is going. If it's too spiky, you don't know whether you're going to be up or down in the next couple of days or so. But when you see it like this, you have consistency across the curvature of the line. And so when we take a look at that, what do we mean and what do we talk about? Well, so what I'm saying is if you see the wallet counts going down within your 1,000 Bitcoin wallets, it's not a reason to think that your 1 units or your wallets that have over 1 Bitcoin are increasing. It's not how it works, okay? They would have to be selling less than, they have to sell all 1,000 Bitcoin, right? But ultimately, in order for the wallet counts to go down within the 1,000 units or more, they have to basically just have 999 BTC, right? And for them to come out of our positions over here, we'd have to see essentially them sell pretty much all 1,000 Bitcoin. And so when we take a look at it like this, we can actually have a little bit more consistency in our analysis. So just kind of bear that in mind. I'm not sure if I explained that overly very well, but essentially it's the best way to kind of be looking at this. If you start bucking it between, you'll start skewing the analysis, which we saw earlier in the year or later last year. I think there was an analytical firm that has actually bucketed it, and it made you believe that actually whales were buying because the wallets between I think it was 1,000 and 10,000 were on the increase, right? But actually it wasn't taken into consideration the 10,000s, which were selling. Everything all in all, when you look at it from my point of view, actually shows you that they were aggressively selling. But if you bucket it, it looked like they were buying. Of course, they flipped and they turned, and their whole entire analysis was actually voided by the end. And so it's important that we understand that there's many different ways to cut data. What I'm trying to do here is give you the most accurate and the most useful information possible. Okay, so that's how I've analyzed this data and why I've built the reports the way that I have. There are many different ways of doing it, but this is the way that I think is the most useful for us. And obviously the community as a whole, right? So that's kind of where the data sits, and it's an interesting one. If we keep an eye on this, you can kind of track. You can also see this is over the last 8 years, and you can see kind of what's happened aggressively in the past, what happened back in 2017, what happened in 2018, and so forth. And specifically, if you take a look at the larger size wallets, such as the 10,000 Bitcoin or more, you can see that they aggressively dumped on the market right towards the end of 2018, bringing in the bear market low point. They were accumulating during the entire bear market, only to drop it all on the market right at the very end. Okay, now I've been accumulating during this entire bear market so far, okay, from the peak of 2021, you can see they've aggressively been buying, and well, they're not coming down, right? They've been aggressively selling into the 2023 move to the upside. So we have to ask ourselves, what is going on here? Are they just extracting liquidity from the market? Or are they looking to try to bring down the entire Bitcoin price into those lows? Lots of things to be thinking about. If you look at history, and if you think that history keeps repeating itself from a price candle point of view, then why would you not think that history is going to repeat itself from the wallet count point of view, right? You can't just pick and choose what you believe. If you believe that history repeats itself, then you have to look at this as history repeats itself. If, however, you take a look at it from a logical point of view and you think, okay, well, candlesticks are one piece of the puzzle, here's another piece of the puzzle, and let's take a look at something else for another piece, you might be able to come together and look at this thing and say, okay, well, actually, the most logical explanation is X, right? Anyway, I'm going to move on from here because events are of interest to me. We can see that, on our website, there's actually an events tab, right? This is, I believe, open to all of our members. I can't remember if it's open just to anybody. I can't actually remember if we set that up or not, but maybe if you give it a click if you're not a member and it works, fantastic. Now ultimately in here, Cheeky JB, he'll go through and he'll basically add in all the key events that are happening, right? So we can see over the next few days what is on the docket for fundamental things that are happening around the world, right? And today we had the UK inflation rate, and that is of interest to me. We also have the USA FOMC minutes later today as well. That's going to be interesting. Inflation rate falls in the UK to 6.8. So this has come down for the second month in a row. There's obviously lots of different things going on in the news. This is a good sign, I guess. The inflation has pulled back, but it is not going to change the PM's kind of approach to inflation and interest rates. He kind of talks about that in here somewhere. It's probably gone. Oh yeah, here you go. If we stick to plan we've set out, we'll get it done. All kind of usual stuff, which is great. Essentially he's saying that his plan is working. He is making people poorer. He's making people lose their homes. He's making people lose their jobs. Yeah, his plan's working. It's doing a fantastic job at it. But what do you expect from a billionaire? Obviously, I kind of have tongue-in-cheek with it all, of course. Ultimately, there's no real way of avoiding the inevitable, which is that in 2020, they decided that they were going to make the rich richer by printing all the extra money. All the extra money flowed in one particular direction. We know this. No matter what country you're in, you saw the same scenario unfold. And well, as a result, we were paying for it, right? This was an inevitability that I was talking about back in 2020. Nothing is free. You can't just be given checks every single month without it coming back around full circle. The poor are going to be getting poorer. The poor are losing their homes as a consequence to their actions back in 2020. And this is a global problem. This isn't just local to the UK or anything like that. So for the most part, really what happened here, we just, I guess, sustained jobs for a very short period of time, and as a result, you now have the consequences of that. In interest rates going up, inflation sharply increasing, making it very, very difficult for people. Seeing a lot of people having to downsize their homes because they overextended themselves from poor money management at the individual level. So the actual people who were receiving the monthly funding, for example, they overextended their positions by buying property that they couldn't afford and things like that, and ultimately have put themselves into a very vulnerable position. I think ultimately the housing market is going to be it's going to struggle quite a bit. I think in the coming months. I know there are individuals out there saying the opposite, but for the most part, when I look at the economy, I can see an abundance of office buildings and industrial buildings that are essentially empty, simply because now more people can work from home. Businesses that went bust in 2020 and 2021, and those buildings haven't been filled. And of course, we do see that there is in places and pockets of commercial property being converted into retail property. That's also going to flood the market with excess residential property, of which we're already seeing an abundance of larger homes on the market for a longer period of time, with smaller homes actually being on the market for a shorter period of time, an indication that actually there's a lot of downsizing occurring as people are looking for more affordable homes. And of course, that kind of demand isn't going to be around forever, with interest rates and mortgage rates being the way that they are at record highs. So for the most part, I don't see it being a very great outcome for the regular person who's working a 9-to-5 job, who's struggling as it is, if they're able to keep the job, of course, because with everything that's going on with inflation and cost of living, a lot of businesses are also getting squeezed. So I just think it's going to be an interesting time over the next few months. And one of the big catalysts, I think, for downside price action across the board, I think, is going to be where retail investors are having to sell other assets in order to pay the mortgages and things like that. And that's not even to talk about the other essentials that you need as well. So although inflation rate is decreasing here in the UK, I suspect interest rates are going to continue rising until the job is done, and that comes from the PM side of things. So what does that leave us with? Well, it means that we need to be prepared for the future, right? In the best way that we possibly can. And to do this, we need to make sure that we're not extending our positions. We need to make sure that we are using correct risk management, and we are understanding that we don't want to invest more than we are willing to lose. This is key kind of terminology, but pretty standard stuff that you hear in this space, right? These kind of phrases. Now, not investing more than you can lose. What does that mean? Well, it means that your life does not change regardless of how much you've invested in the space, right? If you've managed to invest $1,000 and that doesn't change your day to day, fantastic. If you've invested, $10,000 and you're kind of really nervous, you're itchy, or a bit like nervous about what's going on. Is it going to increase by X date? You have like an expiration date to it. Then you've probably overextended yourself. You've probably invested more than you can willing to lose. If you're looking at it and thinking, I really need to get this money out by the end of the year, then you've probably overextended yourself, and you need to kind of look at that from a risk management point of view. You probably need to consult a financial advisor. I'm obviously not a financial advisor. I can't give you a financial advice or anything like that. But I would say is that if you are one of those individuals where your positions are causing you a lot of stress, sleepless nights, you kind of have a date in mind where you need to see this money, then I think you're going to unfortunately be probably one of the victims of the market rather than one of the success stories of the market. Most people who are successful in this space only invest what they are willing to lose, and it doesn't really matter if they sit on it for a long period of time. If you've got an expiration date to your investments, as in you need to have this money out by X date, then that usually means that you're going to succumb to more emotional decisions and you're going to overreact to the market conditions. That being said, strategy is everything. So making sure that you have a good strategy behind how you approach these things is going to be absolutely key. So that brings me on to the exchange section of today's video. I talk about this every day because I think it's a very important part of having a good strategy, is making sure that you are familiar with how to inflow to exchanges, but also exflow exfil from exchanges, however you want to term it, right? Ultimately, how do you put money onto exchanges and how do you take money off exchanges? Now, there's many different exchanges out there, and I would recommend personally, obviously not financial advice, but my recommendation in terms of strategic positioning is to make sure that I'm registered with as many of these exchanges as I possibly can. And the rationale behind this is that in a bullish market, you do not tend to find that all exchanges are operating optimally, and then some of them go down, some of them are just too volatile, right? The demand for cryptocurrencies during these bullish movements can sometimes be creating bandwidth issues on the platforms, and it can cause all sorts of problems with these exchanges. And so the best thing to do is, at least in my opinion, to kind of mitigate against this, is to make sure that we have access to as many exchanges as possible. So if your exchange that you would normally use is struggling, you can't log on because there's just so many millions of users trying to log on at the same time, then actually going to a different exchange might be your solution. And you don't want to be trying to set up an exchange, trying to do KYC, trying to figure out how to put money on, take money off, how to deposit crypto, how to withdraw crypto, whilst the price of that price action for your favorite crypto is kind of mooning, right? You want to have all that stuff bottomed out. You want to kind of figure out how all that stuff works way ahead of time. And so that really is why I talk about this in the bear market so much. Ultimately, BitGet is my go-to platform. This is what I use for 100% of my leverage positions, 90 to 95% of my spot positions. And, it is my go-to platform, but it's not the only platform that I use. I have accounts with Binance, Coinbase, KuCoin, Gate.io, Crypto.com, Bybit, for example, right? And so many others. And I can switch and change as I need. Ultimately, I haven't had a need to in this bear market. BitGet is very, very good at doing exactly what I need it to do. And hopefully in a bull market, it's going to survive incredibly well and deal with the demand that comes with it. If it doesn't, though, I have backups and all that good stuff. So links in the description below for many of these different exchanges, including my personal favorite, which is BitGet. If you do use the links in the description below, you'll be eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform, and a whole host of additional benefits as well. So why not go ahead and check it out? There's many different fantastic offers available across various of these different platforms. Why not click on check out BitGet, linked in the description down below. I don't think you'll regret it. Moving over into the trade elements of today's video. Obviously, we saw some really good gains from Reggie Classics over the last few days. We can see some really cool stuff going on there. Ultimately, we can see that trading opportunities, I think, are starting to come up. We saw price movements quite aggressively moving down on Bitcoin and many of the altcoins. I think things are now finally kind of lining up for new positions to open in the long and short directions. I think we've got some volatility to be expected. We've got FMOC minutes. That can potentially cause a little bit of volatility. It doesn't usually, but we'll see if it does. And of course, we've got inflation rates and all various different things as well going on. I suspect that we're going to see some volatility, which will lead to great trading opportunities. If you're looking for some more information about kind of the trading and stuff that we do here in our Discord server, then why not go ahead and check out membership.𝗕𝗘𝗪𝗏𝗏𝗏𝗏𝗏𝗏, where we check out the memberships area. We do have trading elements within that. And of course, join us down in Discord and ask our members how they approach these things as well. Guys, I'm going to wrap this video up right there, though. If you have found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.